Hello, Warriors. Dixie makes new lows. Testing 96. How's everyone doing today? Hello, Ingmar. Eric. Yes, we start at this time every day, Eric. Hi, Steve, and welcome to Face. Mike, how are you? Hugo. Hi, Kman. Mike Bergman. How are you? Kurt, Ryan, James, Will. How are you? Everyone doing okay? Dollar Bear's cleaning up. Brand, how are you? Blake, hi. Okay, so let's get to some of this price action here.
And by the way, and good morning, Coach.
Hey,
You couldn't have got a better day to have Joseph Wang here because all these central bankers are meeting in Portugal today.
oh, okay.
Yeah, so look, it's an ECB event. I think you got Lagarde. You've got who else? Yeah,
We,
Bailey,
Pal, Ueda.
how Ueda. Yeah, those.
Yeah, you know what else is even bigger than that? There's something big coming. There's a new dawn. A new dawn means a new beginning. So everyone get ready for the fall because you're going to rise up in the fall with a new platform that's going to, you know, boggle your mind and give you all the input and information you need if you're a hard worker to have a good shot to be successful in a very difficult endeavor. That's our goal, is to give you all the tools, all the input, so that, and across all asset classes now. Okay, so more stock coverage. Uh, of course, we'll still be covering FX, but we're broadening our horizons. The new dawn is a new day for Forex analytics turning into trading analytics. Who's excited?
I'm excited.
Uh, there you go. I'm excited. So we've been planning and working on this for a while. So anyway, let's get to the markets and talk pips so that you have a bigger war chest to go into the new era. Okay, so Blake, did we cover the event good this morning?
You did. Great job. Great
All
job. Yeah,
right.
and make sure you guys get signed up this month. I think we're giving away two trader funding program assessments. If you so anybody who is registered for that registered on for our newsletter, you are now going to be entered for two potential trader funding program giveaways. So we will be giving away one. We'll be figuring that out. Actually, we'll be talking to our team a little bit later today, figuring out how we're going to do this. We're going to give away one for June. We're going to give two away for July. And we've got some great stuff coming. So make sure you guys get signed up. You can do it right from our website, forexanalytix.com. Just go to the middle. It says, just click on that coming soon. All right.
So I was looking for 143 in the yen. Got short Sunday night. I'm gone. I booked it.
Nice.
And I don't know. I was thinking that we were going to put in a low around 43, so it's stretching further. I'll see what the action is like later today. For turnaround Tuesday, I am trying this, buying Canada, betting that we put in a higher low. I'm risking these lows with everything else making new highs or new lows, dollar making new lows, euro making new highs, cable making new highs but diverging, Aussie making new highs but diverging. So that's my play for the day. Basically, it's the old, I don't know, discipline of being long relative strength and short relative weakness. And I have to say that Canada is one that's so far displaying relative strength. Uh, NOK's another one. Okay, NOK might be a buy here if you get any kind of bounce in the dollar. So
There's actually a new pattern in play this morning on that.
on NOK, okay.
Yeah, just
See,
this morning.
And I featured that yesterday. So, if you joined, you're probably in the trade. If you didn't, at least take a trial so you could check out the pattern in place and get ready for, the transition. So we got the full crew here. Let me start off with Ryan. Levels, any levels here? Maybe we're just going to go straight to Blake's Gartley target of 120, or is there anything here in Euro?
119 for me. That's my next big level. Up above, there's going to be a few little bits and pieces on the way, no doubt, but 119 is it. And then obviously the big fat 120.
Yeah,
Everyone's got their eyeballs on that. Even ECB's De Guindos, who says Euro at 120 wouldn't be a problem, or thereabouts. So yeah, it's never a problem until it's a problem.
right.
And
Well,
when it is a problem,
I don't know if you guys saw the Sense interview on CNBC, but it was Friday, I think, and he actually came out and said we're in favor of a strong dollar. The market's ignoring it, and a lot of people are used to, uh, you know, secretaries, uh, uh, his position. What is it again? He's the Blake. What's his treasury? Okay, he's in charge of the treasury. Anyway, most of them would just mean it as lip service. Maybe he means it that way, but it's a first statement um, since before the election or after the election about wanting a strong dollar. Most of the rhetoric is, let's take it down so um, we could improve exports, make our businesses more competitive with a weaker currency. And, I think a lot of people picked up on it, but a few did. And, uh, you know, markets can ignore, Fed guys and, Secretary of the Treasury for a while, but I think that's an interesting statement. Maybe they think it's gone far enough for this wave. He also said, he traded currencies he said, I was a currency trader for 30 years. So he knows what's happening in these markets. And that's pretty unusual. His background of being a FX trader, along with all the other instruments he used to trade. So it's not like he doesn't know what's going on and what the implications could be if this gets out of hand. So let's move over to cable, which, has been underperforming. Look at, euro pounds making new recovery highs here. Could this have been it with this divergence here in cable? Ryan, what do you think before I go to Kman? I'll give you cable.
divergence in what way? We've seen a top, or we've got more to go.
Well, yeah, here's a confirmed high right here, and this was a little flag, and now we're making a new high, and the RSI is under 70. Unlike euro, which is trying to confirm its high, it hasn't. Even in the euro, we haven't had a confirmed high since
Yeah,
June 12th, so for a few weeks.
yeah. I
Is
don't think
this a
we're done. I don't think we're done in cable. But the euro's leading the way. I think that's the thing, and all else are following. So yeah, cable. Is it going to top here? I don't know. If the euro gets up to 119, then cable's probably going to be tapping up towards 138, something like that. And all the other pairs are dragging as well. I think the bigger question is this just a continuation now? Are we getting back to heavy dollar selling that we were seeing prior to the last week, end of month week, and all that sort of stuff? Or is this just new month flows? Because obviously the yen's taken yen pairs have taken a bit of a bashing across the board, pretty much out of the blue. The Swissies getting Swiss pairs are getting caned again. That's continued for month end. So I always say at this time of year, you can see new month, new quarter, new half year flows as much as you can see end of month flows at this time. So tomorrow, I think, might be a different we get a clearer picture. If we're still above 118 and flying higher, then we resume the dollar selling trend, and cable's going higher, Aussie's going higher, Kiwi's going higher, all of them are going higher. But if it runs out of steam today, then then you got to ask the questions.
Okay. Do you want to comment on the yen?
Yeah, I mean, it's really, this has sort of come out the blue a bit. I mean, obviously, you look at yen, you look at yields, and we've got 10 years, US 10 years coming down to sort of the 4.
So is that correlation back on, Brian? Because it was disconnected. It's coming back together.
It could be. That could be one of the reasons why it might be, this dollar selling theme, the market pushing the Fed for cuts, Trump pushing the Fed for cuts. Gold they were expecting 1 cut in December this year in their last forecast. Now they expecting 3 cuts starting in September. Another flip flop by a major bank. So, again, it's just hard to put your thumb on one reason and say that's it, because it's like 50 reasons why things could be happening.
The president wants to be like Switzerland and have the same rates. He wants to go negative. And if we go negative, we won't be like Switzerland. We'll be like Zimbabwe.
Yeah, exactly.
Right?
Exactly.
So anyway, still a little divergence here on the 4-hour in the, it's fully embraced now that rates, all the rate cuts are, the doves are going to win out. Maybe Powell, the shadow Fed, everything. I think everyone's on one side of the boat on the rate picture now. And, they had the trend going their way, but we start getting back above 430, 434, that's over. So I am looking for a reconnection of this correlation.
Yeah.
And I think the next move, if they reconnect, is higher yen and higher yields. There's a very contrarian view right now. TLT grinding, trying to break out here, actually. The bond bulls are finally getting a payday. But one bad day back under 87 negates all this work going back to May. This was the Moody's downgrade, a classic reversal on, major news event. So we'll see. Really appreciate your input, Ryan.
Pleasure, mate.
Okay, really, really clean, concise, like usual. And Ryan's already ready for the move to trading analytics. So I know Kman is too. Hey, how are you, buddy? So silver coming back, not quite as strong as the golds. Back. Where are you at on these metals?
I'm a little surprised gold rallied $100 so easily for those. Where am I? I'm still at the same place. I'm trying to be patient to reload silver. I'm not sure if I'm going to. I'm for sure not going to pay up in this gold. I'm quite curious where this can go. It's probably a continuation of dollar selling like we are seeing in most of the pairs. Also in gold, the yields are lower, back to my neutral level at 420 in the tens.
Okay, let's stop there, bro.
Yeah.
All right.
So I told you, right? I told so many times. To me, 420 is neutral.
Okay. All right. So here we are.
Yeah.
Do we start trading sharply under neutral? Towards 4, or do we have a bounce back and people, their optimism about lower rates be tempered?
That depends where we are going to go with 2 things: the jobs report at the end of the week, and what is going to happen with the trade deal deadline. It seems that there's already been rumors they may go to more skeleton trades just to be able to put the date on, and that they manage to make trade deals, which if they don't slap on the hardest tariffs, that's where the bond market is, I think, repricing for now, and keeping the potential open for maybe a bit weaker jobs report, if anything. And also as Ryan already said about Goldman Sachs repricing now for 3 rate cuts, that's all of this is the reasons, the basket of reasons why we came back from 4.5 down to 420. Whether we go under here, I think that's as I say, it depends. If we get a very strong jobs report, we're probably going to hang around in maybe 430 again. If we start to go under 410, I'm going to get a bit worried is not the right word, but a bit more confidence that we may actually drop below 4, because that means that one or even two of those conditions further in the week and next week have been materialized. So that means more skeleton trades instead of like the big ones, and a bit of a weaker jobs report. And then I think there's going to be more repricing in the bond market, and then I think we can drop to 4% pretty easily in the tens, and as a result of it, probably a lower dollar again.
Okay. All right.
Just one thing
Go ahead.
about you were talking about the yen. I know I am not usually, but I know a lot of people watch it. The seasonals for yen are pretty strong in July, every July.
For a strong yen.
For a strong Japanese yen, not for a strong
Yes,
dollar.
you're right.
Dollar is
Okay.
actually on the other side of the spectrum.
Okay. So the most crowded trade in 20 years continues to work. Let's move over to Blake. So the majority can be right for a while, can't they, Blake?
Well, they have been, that's for sure. But it's getting, it's extreme, and it's getting extreme. And I'm just hoping that sometime this week we trade up to, 120. And I think 120 is going to be a big pivot for a lot of people, as far as the euro goes. And the dollar index, remember, Dale, we've been talking about this 96 level and the dollar index for forever. But you're right in pointing out there's a lot of divergence out there. The dollar CAD, I actually started buying the dollar CAD over the last couple of days, and it's really, and then I started picking up some dollars elsewhere. Like I said, I'm playing both sides. I was long, euro late last week, and running it up until the high 117s, and just trying to play both sides of this. But I think we have to be real careful about being too one-sided. I think it is becoming a little the market's getting a little lopsided for sentiment, and we've got a big week today, or big week
Well,
this week
yeah.
with the jobs report. And today we have ISM, we have JOLTS. Tomorrow we have
Ow!
What?
I just had a shock.
Oh, got it. Do you remember Jolt Cola? I don't think anybody in
Oh,
Europe got any of that crap, thank God. But
I think so. What, it was a triple caffeine or something, or
yeah, I
what?
used to actually drink
Uh,
Jolt Cola on my trips to and from California on the road. It was
oh, okay.
more
We had it on
more.
the floor. We used to have it on the floor for those hangover mornings.
Did you guys? I was surprised you
Yeah,
guys even had that
So
there.
so you had one every day, bro?
it's like rocket fuel. Yeah, wake you up.
You go into the
So
pit, be like an animal. All right.
10 minutes. Yeah, sleep after 20.
Yeah. All right,
So,
Blake.
yeah, I thought I'd take the charts really quick, and one of the things that I think is going to be really interesting is, and I want to ask these guys before we bring in Joseph, who's coming on in about 10 minutes. Are you guys expecting anything from like Powell or Ueda? I would think Ueda might be maybe the outlier here, but also you have Sterling that has been underperforming, and I do have to point out that the Euro Sterling here, I'll pull it up over here so you guys can see it. So if you were reading last night's analysis in Forex Analytix, we have a bull flag pattern going on in the Euro Sterling, and it is really, Sterling looks not, it doesn't look great up here. It's not following through like the Euro is. Maybe Bailey says something today that continues to rocket a little bit. But I guess the question I want to ask, I'll start with Ryan since he's here. Are we expecting anything from this central bank meeting in Portugal today?
Well, it's open. It all depends on what questions the presenter's going to ask the panel, because they're all on this panel. And obviously, the guard, we need to look at comments about the euro, because I think that's going to be front and centre. For Powell, he's probably going to face maybe some political questions, or maybe not, seeing as he will be telling the panel host what to talk about. So I'm not expecting much from him. Bailey, usually, every time he talks, the pound goes down. So, that's the same old, same old. And Ueda, it's hard to see that he's going to offer anything different. So prepare for a surprise, but I don't know what we're going to get out of it.
Well, if you haven't heard it this morning, if you look on the live squawk feed here, President Trump was asked about deporting Elon Musk. And so if he's going to deport Elon Musk, I'm sure he would be willing to deport Fed Chair Powell. So, I think maybe he gets a 2-for-1 there. I don't know how he would deport Powell, but
Wow.
he's going to at least try to give him a go. Did you guys see the love letter that he wrote yesterday?
Yeah.
It's hilarious.
No.
I mean, that was pretty funny. Did you see that, Dale?
No.
Oh my God. Here, it's in the news and research room. Here. This is to Jerome Powell. It was circulated yesterday from Donald Trump, just saying this is where our rates are at. We should be over here. You're too late.
Yeah, Switzerland.
Yeah, exactly. It's pretty funny. Anyway, let's ask Kman what Kman thinks about this little love letter that Powell got.
Yeah, he's trying to find any possible way to put pressure on him, of course. Yeah, well, if that's how you run, well, the biggest country and on the most important seat in the world, in theory, well, okay, good on him.
Yeah. I heard a story because they're talking about, the treatment that Powell is getting. And this guy reported on other presidents that had issues with the Fed, but they didn't do it publicly or like this.
Yeah,
But there was a story that Johnson, I forgot who the Fed chief was, but he actually assaulted the Fed chairman, went to his house and threw him against the wall and saying, "You're keeping rates up while our boys are in Vietnam." I mean, an actual physical assault on a Fed
Really?
chairman. Yeah.
Wow.
guess
Yeah.
what? If
What?
they hadn't sent people in Vietnam to fight a war that was none of their business,
I
that
know.
wouldn't be a problem whatsoever, right?
Well, okay, yeah. I didn't want to go,
Also, from
but
an
I
ethical
love platoon.
standpoint, I have a question: is Trump right or wrong to attack on Powell? I know that the question might sound extremely simple, right? And my point of view is that it's not that simple. It's 100% wrong if you look at it from an objective standpoint. But then, is the Fed unbiased? Is the Fed politically unbiased? Has it been in the past? I mean, what Trump is asking is completely wrong and unethical, but is it anything different than everybody else has done in the past? They're just not doing it in an open way. Do you have any doubt whatsoever that if Powell was the appointee of Trump, he would have already set in place the quote unquote proper interest rate?
What is it, Steve? You're Fed chairman for a day.
A lot higher than it is at the moment.
Higher.
A lot higher, not higher. Higher
Okay.
is a wrong answer. It's a lot higher than what it is at the moment.
Okay. So
Globally, not just.
Okay.
Yeah.
So Paul's he tried it a few months ago and he saw the reaction on the long end. Do you think he's afraid of that happening? That they call them bond vigilantes.
My son dislikes a lot the taste of a specific antibiotic. But when he needs to take it, I'm not asking him if he likes it or not. I'm just forcing him to take it.
Yeah.
I don't know if you get my point.
Yeah. Yeah. It's not you have to take the medicine to get better.
Yes.
Yeah. Okay. All right. Well,
Or-
a lot of great metaphors from you today, man. And you say I should be the poet. Anyway, thank you, bro.
Hey, let's real quick before we we bring in Joseph, and Joseph's going to be coming in. I want to talk about something that you mentioned, Dale, when you're talking about currencies, and something that I cue off of a lot, and you do too. And I know Kman, Ryan, Steve, everybody that's here does, and I think a lot of traders really should pick up on this. We're seeing the euro just plow higher, and it's the predominant, weighting of the dollar index. It's 56.8, 57%, something of the entire weighting of the dollar index. But you're seeing divergence away with sterling, so to speak, as it reaches for the key 130. This is a shame because this is my target was this weekend to get out of my pound longs at 137 82. I think we went to, is it to
That's
88?
perfect.
Yeah, I got out of it though. I got out of it yesterday, like morning. So I took it off. I took all my dollar shorts off yesterday. Anyway, and I took it off before the euro hit 118, excuse me. When it hit to 117 and change yesterday, 117.49, I think it was, or 52, something like that. Anyway, I took all that off. But you're seeing the euro plow higher, but you're seeing, certain currencies really diverge. And you pointed out that this, the dollar Canadian starting to show some life down here. The US
Yeah.
dollar Norwegian krona, by the way, if you guys haven't seen this, let me
Look
go
at
over.
that.
Yeah, I want to show you something here, Dale. Because I had to put it a little bit different. Here it is. If you go to basic technical analysis and go to the daily chart, this is an inverted head and shoulder pattern that's developing.
Nice.
Yeah, and in today's hold, like as I mentioned last night, as long as it stays above, the 10
Yeah.
level, we have an inverted head and shoulder pattern. So right now we basically held 10, and so we have this big inverted head and shoulder pattern. If we can break back above like 1020. But the reason I'm bringing all this up is because you're seeing the divergences in a lot of dollar pairs, and I don't think it should be something that you ignore. It doesn't mean that the dollar is going to turn, but one of the things that we have going for us this week, and I was talking to a friend of mine yesterday afternoon after the market closed. I was talking to him about I was boring him to death talking about the extreme sentiment in the dollar, but everybody's been betting against the U.S. In mass, for a lot of reasons. I mean, we have all the reasons laid out. We talk about all the time. No one wants the Trump volatility, the diversification into other currencies. You want stability of the euro. You want to get out of some of your dollar holdings. This has been a theme that's been around for the last couple months, and it's now at extremes because at some point you're going to turn around and you're going to go, well, I am buying the euro over the US. Now, if the US puts in some good data this week, remember we have ISM services today. We have JOLTS data today. Tomorrow we're going to have we get unemployment claims on Thursday. Tomorrow we'll have ADP data. Plus we'll have on, like I said, Thursday, we're going to have jobs report, unemployment claims, ISM services. If this data doesn't turn sour this week, we could be setting up by the end of the week before the 4th of July, some fireworks. Oh, bad pun. Some fireworks in the dollar. You could see the dollar really rally if the data is not showing weakness. So that's the thing that I think is the big risk right now for anybody trading the dollar, because they're betting on our data coming out worse than expected. And if it's not, we could probably see a squeeze because everybody is lopsided right now. So, Ryan, what were you going to say?
No, I'm just giving you a yellow card for the pun.
Oh, God, that's what that was. All right. You're giving me a yellow card. I know sometimes I I can get those. But hey, I know we have Joseph Wang. He's here. He's here probably to discuss what all these central bankers are discussing this week. But again, I want to reiterate the dollar, people are very aggressively short the dollar for good reasons, but a lot of the market is very short. This is, I've heard people say this is the end of the most bearish the dollar sentiment has been, and blah blah blah. They have all these statistics. I just think it's getting pretty extreme. So if the dollar doesn't play, or if the U.S. data doesn't play ball this week, and we show softness, remember, and I have to, remind people the US economy has been stubbornly strong and resilient. And, people continue to bet against, the United States, and it is still a very strong economy, especially taking a look around what other countries are doing. So don't forget that at the crux of it all, you have people like Steve. Steve's like, hey, rates should be a lot higher for all these different reasons. If the market takes a step back and says, we're expecting all these rate cuts and we have a shadow Fed coming in, blah, 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 but Powell's still going to be the Fed chair until next year. When is it? May, April next? I forget what month he's going to be relieved, but he still has the reins at the Fed, and I think he's going to continue to buck whatever trend that Trump is trying to push.
He's going to raise rates in July.
I don't know about that. So, hey guys, I don't want to take away from Joseph being here, and I'm sure he probably has a lot of words to say about what I just said. But I want to thank our entire team. Steve, love to hear your thoughts and opinions about rates should be a lot higher than they are right now. Kman and Ryan, always love your views. Didn't get a chance to listen to the Flow Show today, and I do that almost every day, but today I couldn't. So make sure you guys listen to the Flow Show. Listen to these guys in European hours. Get caught up. I usually get caught up within an hour, what's happened all night, reading the live squawk feed on ForexAnalytix, and then listening to the Flow Show. So make sure you guys do the same. You guys can get caught up right here. And Dale, have a great interview with.
Help me find. Can you help me find him?
Let me see. I will see if I can find.
You said
he's raising his hand.
All right, I did try and promote you. Please accept the promotion, buddy.
And as he's being promoted, I have to ask him when he comes on here. Here he is.
Yeah,
Joseph. Good morning. Welcome to F.A.C.E. And let me ask you, do you think rates should be higher than they are right now? And do you think Powell should continue to fight? And I'm going to leave it at that question, and I'm going to bow out, but I'm going to be listening in. And I know Dale's got a lot of questions for you. So welcome.
That was my only question I had.
That was your only question. I stole it.
Yeah. What do you think, Joseph? How are you?
Well, hey,
Welcome
good morning,
back.
guys.
Welcome back, buddy.
So, okay, everyone hears me, right? All right.
Yes.
So, no, I don't think he should be raising rates. I think he should be cutting rates. I mean, think about it from his perspective. What's the Fed's mandate? Full employment and price stability. Where's inflation now? Well, year over year, it's like, around 2.5%. That doesn't seem very high. It's just a little bit above target. What's the labor market looking like? Well, the labor market has been definitely slowing, right? If you look at monthly job growth, it's been trending lower. And I think most alarmingly, if you look at the continuing unemployment claims, they keep going higher and higher. They're at multi-year highs. So what that's telling me is that it's harder and harder for people who lose their job to find a new one. So the labor market is slowing. So that tells me that if you're the Fed, you got to be thinking about this. Now, when you look at sectors of the economy that are most interest rate sensitive, like housing. Now, there's a front page story in the Wall Street Journal today telling you that the housing market is slowing, especially in the Sunbelt areas in Florida as well. So no, I don't think. And of course, you could also look at, say, the home builder stocks or new construction inventory, things like that. Definitely the interest rate sensitive sectors of the economy are slowing. So that calls for, I think, rate cuts, and which is what the Fed themselves are projecting, right? In their dot plot, they're thinking maybe they'll cut twice this year, maybe more, depending on how things evolve.
Can I ask a question really quick, Joseph? Just and I know this is not my interview with you. I know I need to unleash the Dale here really quick, but just looking at like housing prices, and let's say, you got the shadow Fed. I'm sure you're going to talk all about that, but then you look at like home prices, and what happens if the Fed does actually cut rates, and let's say you have a Waller that comes in and cuts rates to, not to 1%, but let's say he brings them down 2 full basis points, sometime in 2026. What's going to happen with our home prices if they really are not far off of all-time highs? I mean, yes, you have certain markets that, maybe Austin or maybe Phoenix, it's sucking wind a little bit in Miami.
And since you interrupted Blake, I have a question for Joseph as well. If I give you my monthly bills and add to those 2.5% every year, will you be covering them for me for the upcoming future?
Okay, so on the housing front,
yeah.
So I think it's possible we have rates down and then housing begins to surge again. But the thing is, when I look at, so let's say look at the 10-year, it's come down, steadily the past few weeks. It doesn't seem like that's been a big boost to housing activity. And if you uh, listen to the new home builders, they've been offering big interest rate incentives for the past few months. That has helped their sales, but it doesn't really seem to have pushed up housing prices. I think that obviously if we have rates lower, that's going to help, but that's not the only thing that matters. Other things such as the job market, I think matter more because if you are someone who wants to buy a home, you need to feel secure in your employment, and that's not happening right now.
Do you, Joseph?
Do I what?
Feel secure in your employment?
As long as the market is open, I'm going to be making money. So that's
There
fine,
you
guys.
go. What a great setup for you.
So
okay.
I think it could. I mean, lower rates could juice the market, but it seems like there's just this gradual slowing of the economy, such that I don't think you'd have that surge in home prices that we saw in the past. So
thank you for addressing
we'll
that.
see.
Thank you.
But
all right, so
yeah.
with your view, look, I'd like to tip my hat to you on your, last time we talked, last couple times we talked, gold was part of your strategy. This is Dale, if you if you're confused.
Yes, I know.
I the bad boy is on now. So that you were long gold, and what a ride, one of the best bull moves we've seen in a long time. You still maintain long gold positions in this environment?
Oh,
We've had a little
absolutely. I think
pullback.
gold has much, much higher to go. I think gold is really the only thing that I'm super bullish on. Everything else, I'm not as sure. I mean, we have big changes in how the global monetary order is operating.
Yeah.
So we've
I,
already
I
seen
also, yeah, I also saw your mea culpa on your video that you put out last weekend, a few days ago, about the market making new highs, and it's a bit confusing. But with your narrative this morning, are you not confused anymore that this melt up could continue with maybe shallow little pullbacks
No, I'm
in
still
risk?
really bearish on equity markets, and I know that's been
Okay.
wrong for the past
How do you express it?
So I do this through options, so
Yeah.
futures options. So volatility is pretty cheap if you look out, say, actually it's cheap and near traded as well, but I have December puts, and that's how I'm expressing it.
Okay. Well, that's a lot of time. All right. And expectations, maybe at least, I mean, this was one hell of a wave. Um, you think that we could be in a position to revisit these lows, or maybe 5 to 10% corrections are all we could look for in this environment?
So my view is that we have a very large dollar depreciation, and that would take down the equity markets simply because there's just so much foreign exposure to dollar assets. So, I can easily see the dollar going down another 10, 20%. There's really no stopping this. It's the direction of policy. You have a large fiscal deficit. You have, maybe President Trump having more influence on the Federal Reserve. And of course, there are many people in the administration who would bless a lower dollar simply because they think it will help exports. Now, the
Well,
U.S.
Bassan said Friday he wants a strong dollar. First time I've heard him say that.
Yeah, they always say that though, right? That's the
Okay,
official
so
policy.
yeah,
Oh,
yeah.
strong.
Okay, so
What does that
just
mean though? I don't
lip
think that means.
service.
I don't. So, what does that strong dollar mean? I think that means they want to be the reserve currency, but it doesn't mean they have to have a strong exchange rate. Now, if you look back through history, not too long ago, let's say 15 years ago, GBP USD, that was it was $2 to the GBP, right? And
Yeah,
Euro USD used to be 1.6. Let's say in 2000.
I remember.
Yeah, so the dollar can be move around in a range on an exchange rate basis, and historically we're on the higher end of that on an exchange rate basis. But I think what they don't want to lose is the dollar's role as reserve currency, and I don't think we're in any danger of that happening right now.
Yes, Brent Johnson says the same. The milkshake theory.
Yeah, milkshake man.
Oh, yeah. So he's been taking a lot of heat because a lot of people think that he meant you had to just be long the dollar all the time, but he uses it for asset classes. So you're in the puts, and you go with S&Ps, not sector related or individual stocks. What strike price are you purchasing if you're all the way out there in December? Because if you're an options trader, um, you know, uh, are you near the money when you trade options?
No,
And,
it's all the money. It's 5,500, I believe.
okay, all right, all right. Well, I hope you see it because that'd be a great buying opportunity, I think. And what do you think? 120 euros just in the bag could be there tomorrow, and
Yeah,
or
absolutely. Absolutely. There's the momentum in this Euro USD is just really strong right now, and it makes a lot of sense in terms of the US trying to, do things that are concerning the people, and the euro being the next best alternative after the dollar. And they're doing some good things that I think have been market positive, right? They're trying to spend more money, trying to reindustrialize and so forth. Now, I think
what
something
about the
else.
positioning though, Joseph? I mean, I think this is the most crowded bearish dollar trade in over 20 years.
Not at all, actually. I don't see why you would think it's crowded. I mean,
It crowded
globally,
based upon positioning
yeah, I
in
know.
see.
Globally, the world is tremendously, massively, ridiculously long dollar assets. There's nothing more crowded than long dollar assets. I mean, the US is the global producer of the best financial assets in the world. So I don't understand why it would be crowded.
Just I get CFTC COT data
Right.
that from that standpoint.
That's a tiny, tiny part of the FX market. The FX market is huge. You have the spot market, you have FX swaps, you have
Yeah.
Options and so forth. The exchange traded stuff, the CFTC stuff, that's a tiny, tiny fraction of the market. And if you look at the actual real money holders, you know, think about all the people who are long cash equities, cash treasuries, cash corporate bonds abroad, foreign
Yeah.
pension funds, foreign insurance funds. No, I wouldn't look at the CFTC as an indicator for positioning for FX. The FX market is just so much bigger than that.
Okay. Well, I'm buying the dollar here. So TLT, what do you think? We're finally going to have some. This is a meaningful bottom on the long end, or is duration still going to underperform the long end of the curve and continue to have some steepening with
So
this
I
going
think,
on?
look, so the administration wants the yield rates to go lower. They have the tools to do that. Best in it can adjust the treasury issuance, shorten the maturity profile. Trump can take control of the Fed. So you don't want to ever fight the government. This is something that the government controls. It could be a bumpy ride. You could have people freak out and trying to sell, but if the government wants rates to go lower, they have the tools to do that. So yeah, you don't ever want to fight the government.
Not this government.
Not any government, really. When government gets
All right.
mad, they do what they want to do.
Yeah, that's true. So, I think you did say in your some of the things that are happening here in the U.S. is a little bit banana republic, huh?
That's the
Huh?
direction we're headed.
Yeah. So, uh, okay, that's an interesting comment. So, you think we're in the fourth turning? Joseph, ever read that book? I know that you know, use your background from being at the Fed and your trading, uh, your trading skills to pull equity out of the market. But do you think that's a possibility that, the trust in institutions, um, you know, there was a movement to get rid of the Fed, and um, maybe that's what uh, ends up happening because it's so politicized.
So for sure, we're in an era where the future will not look like the past. The entire
Yeah,
political system is changing. And I think the underlying cause of this is that we just don't really have a middle class anymore. So during the Great Moderation, say,
yeah,
the post-war period, large growing middle class, the political system caters to this large growing middle class. But today,
yeah,
we have a lot of people who are more and more people who are poor. And so now the political system caters to those who are poor. And that's populism. And so if you have a, let's say, a 5 to 10 year horizon, my expectation is that taxes would go up a lot because that's what happens when poor people have more power. They want to take money from the rich. Now, Trump is, he calls himself a populist, but come on, guys, he's a billionaire and all his friends in his cabinet are billionaires. Eventually, we're
but
going to have a real populist, right? Could be a president AOC or something like that. When that
right,
happens,
okay,
taxes are going to go higher and the market's not going to be good. It's going to be really bad. So
yeah.
that's how I
So,
think
so
about it.
maybe there's a little foreshadowing with the mayoral race in New York.
Absolutely. I think that is where we're headed.
Okay. All right. So, how do you, how do you maintain your cheerful attitude? I mean, I know you're good at what you do, Joseph, and I know what you see coming. And I think a lot of people, if they, see the same thing, myself included, the trend, you feel it in your bones. How do you just shake it off and maintain a good attitude and make the most out of today? I know it's not a market question, but I'm interested because of your demeanor. You seem so calm all the time.
Yeah, so I manage this risk just through other things. For example, I think in the future what would be more useful is to have real economy businesses. So I buy small businesses, I diversify into jurisdictions that I think are more positive. So like for example, I have real estate in Utah, which I feel like will always be a good law and order state. And
Interesting.
try to get out of places like so I used to live in New York City. I don't live there anywhere anymore.
Yeah.
So it's about these things that are not part of the market, but I think just broadly in terms of managing your wealth or managing, um, yeah, professionally, I think that's the way to do it. I think in the future, all this stuff about, at the end of the day, guys, all we're doing is we're just gambling in the market, finding out which numbers will get bigger, which numbers are going to get smaller. I think in the future, this is not going to be as valuable. It would be more valuable to actually produce goods and services that people use in real life. And also, if you have your own business, you have better control over things like taxes and expenses and so forth. So you don't want to be a W-2 employee. I think those guys are ultimately going to be the ones that get fleeced to fund all those great programs future presidents have.
Okay. So, you're preparing for what you see. And, some people are very extreme about prepping for what you see coming. When does this system take away the wealth from the wealthy through either asset prices declining substantially and not just for a week or two, but enter some type of bear market phase, bear market that could last a period of years so that the wealth effect, since they're the only ones really people with assets. And unlike you, they're not buying bicycle shops and bars. They're just leveraging NVIDIA. When does that happen to the upper 10%, where they feel the same pain the new poor are feeling, or do they escape it?
So I don't know, but my best guess is soon. So what happened?
Okay.
I think that we're going to have a bear market now. So
okay,
I don't. I look at the market, and I part of this game is being able to see who you're trading against, who's sitting on the opposite side of the table. And my sense is there's a lot of speculation here. There's a lot of people in the market who are betting bigly, doing
yeah,
options, and just all around people who are not really uh, I guess proficient in the market, but just here because number go up. And so this
yeah,
is something that we see over and over in history. And when you have this kind of involvement and degree of leverage through options, it's vulnerable. And then you have this massive depreciation of the dollar.
yeah,
I think if the equity market were to go down a lot, as I think it will, that will be the move that triggers enormous amounts of social discontent, because then that part of the population that has been doing well will also do poorly, right? Today we have, say, half the population who doesn't have assets, who's been
yeah,
struggling with inflation, low
right.
wages. The other half has been living high on asset prices. They lose that. I think that's more of a recipe for bigger political change. So it depends
Okay.
on when that happens.
Yeah, I know a lot of people think 26 is going to be the year, because they're talking about that we're going to enter a time frame where all the commercial property, a lot of debt has to be rolled. There's a wall of it that starts late this year, early next year. That rates, depending upon how much they're brought down, if they are still are going to be almost double what the original loans were financed at. Do you see that happening down the road? A rollover
So
of debt?
the people that I know in the field tell me that there's some stress in, say, things like multifamily, where a lot of people, like you mentioned, you know, borrowed when rates were cheap. Now that rates are higher and rent growth is not as strong, are having some problems.
Yeah.
So that could be the case. But I'm not really too worried about commercial real estate. I mean, we've also had massive amounts of price appreciation, and that gives you a lot of equity to cushion that. So, um, but
Okay. That in
yeah,
the residential, you mean?
no,
Uh,
everywhere actually, right? Okay,
okay.
so you have some place. So over the
Yeah.
past 5 years, there's a
Yeah.
20%
Huge.
increase in the price level. So that's
Right.
a lot of equity for a lot of people
Yeah.
in all assets.
Okay. And Joseph, buying puts. This is when you buy puts, even if you're still bullish. Not when the VIX is 40, 50. So you must have gotten. Do you do all the Greek work and stuff, Joseph, before you go into your options? The beta, the theta, all that stuff, or you just pick a reasonable strike based upon your technical work?
So, I mean, I look at implied vol relative to where it is historically to see whether or not options are expensive or cheap.
Yeah.
Um, yeah, with regard to strike, I don't have any particular art in that. It's just sometimes just a guesstimate as to where
Yeah.
where things could be, and sometimes I'm wrong a lot.
Okay. Okay. There you go. So even the best, everybody. If people don't admit that they're wrong, and a lot, um, run away, because the best traders in the world know. Most people choke on those words, Joseph. That's what I really like about you, is you'll go on Twitter and people may have made trading calls, and then all of a sudden they never existed. They're revisionists. To own that you're wrong, is not any great sin. That's part of it. It's how you're wrong, and how you manage when you're wrong, so that you have money to be right with. So I also want to people to know how to follow you, but just one comment. Do you think that the action in Bitcoin, this is a second lower high, normally leads S&P? See, because I think we're going to have a correction too. Do you use this even if you don't trade it as some type of indicator of, I don't know, could you say direction and liquidity?
I think
Bitcoin?
Bitcoin is really tied to risk assets. Now,
Yeah,
I do look at that chart, and it doesn't look good to me. I've also
yeah,
noticed you have tremendous amounts of popular support and enthusiasm for Bitcoin, and it's just
yeah.
not going any higher. So that tells me that, things don't look very good for Bitcoin.
Okay. Are you a believer in the asset?
No.
Okay. Is it Bitcoin?
So, I occasionally I will sell Bitcoin. I don't
Okay.
through
Uh,
futures because I don't do the cash stuff for this stuff. Too many complications. But
okay.
no, I'm not interested in Bitcoin.
Do you have an understanding about what's going on with the new bill that they passed and what stable coins are going to mean? Uh, you know, how
Yeah.
this is going to function? What do you think about it?
I think it's so what it is, it's basically, kind of like a money market fund, except that they issue coins instead of money market fund shares. What's really interesting is that it's a really good business if you are someone who issues stable coins because your liabilities, the coins that you issue, you can't pay interest on it. And the assets, you have to invest in safe stuff like treasury bills. So right now, for example, if you run a stablecoin fund, let's say you get $1 billion, you can put $1 billion into T-bills, get 4%, and issue stable coins that offer zero yield because you can't offer yield. It's illegal. So it's kind of like a huge windfall for the people who are in that business, some of whom are
Wow.
connected to the administration. So
So
the
they're getting the
stable
whole
coin,
4% spread.
yeah, that's right. That's right.
Wow.
And the
Wow.
guys, and they're not even legally permitted to pay yield on the stable coins. So I think that the design is to make it easier for people who want to be part of the crypto ecosystem, to buy a stable coin and then swap that into other assets on chain. Um, that I think the crypto stuff is mostly just to uh just to make money through asset appreciation, right? Let's say you get stable coins, swap them to other alts or Bitcoin or whatever, and then hope that you get asset appreciation. I don't see any purpose beyond that at the moment.
Okay. You don't think it's a step towards people accepting that and it being easier transition to a CBDC?
No, I don't think the Trump administration is not going to do a CBDC. That's other countries will. The ECB, very proud of it, going to do it full steam ahead. The US will not have a CBDC under the Trump administration. We could in the future. We have a new president, but at the moment, that's not happening.
Okay, and why don't we wrap it with uh, tariffs and trade? Do you think there's going to be any problems? We really don't have that many trade deals. We like with China, we have the framework. We agreed on a framework. Japan still at loggerheads on a trade deal. Europe, I haven't heard anything. We saw the quick spat between U.S. and Canada. Is that a foreshadowing of what's going to happen here after July 9th?
So I think the trade deals have not gone well for the administration, right? We had this big Liberation Day, huge
Yeah.
sell-off in the stock market, and I think that scared them a little bit. Now, when it comes to China, it seems very clearly that the administration has lost. Now, China just tells them, okay, you want to do this? We're not going to send you where else. And it seemed like they just caved completely. The administration just caved completely. And so that China trade deal stuff, it doesn't seem like it's going to go anywhere. The China has this thing that our companies really need, and that means they hold the trump card. Now, everyone else, I think I think two things right now. So on the one hand, the administration did not like the reaction in April, and so that pauses them a little bit. But on the other hand, right now, after we wrap up the big, beautiful bill, that frees the administration's hand to do other things. And with the asset markets so buoyant right now, that also gives them a little bit of a leeway to be a little bit more aggressive. So originally,
there could be bumps.
Yeah, originally I thought they just wanted this to go away, but with everything all wrapped up, and right now I think they could be tempted to be a bit more aggressive. And you saw a little bit of that with Canada, right? But then the US has a lot of power over Canada, so they don't have the cards, as the president would say.
How about Europe?
So the headlines coming out of Europe have been more conciliatory, so maybe that will go well. So we'll see. They're making noises that they would have things done before the July 9th deadline. But like you mentioned, Dale, we don't really have any trade deals. So I think that's kind of the obvious thing, that things are not going well.
It was great talking to you today, Fed Guy 12.
Thanks for inviting me, Dale. Great
really,
talking to you guys.
And I want to encourage people to go to your site, and so that you could have calm, clear, concise input into your thinking from Joseph Wang. And at the minimum, follow him on X at FedGuy12. And he has some courses, which means you're probably going to have some interaction with him. That would be a draw for me too. So check Joseph out. I'm lucky that I found him on Twitter and get to talk to him every 3 months. And I get his emails and I read them, and I think you should too. So thank you, buddy.
All right. Thanks, guys. Happy trading.
All right. Joseph Wang, everybody. That's a wrap. Good luck today on Turnaround Tuesday. And you could join the team in 13 minutes on the Morning Edge. I'll see everyone tomorrow. Adios. Remember, don't just count your pips, count your blessings, right? Money comes and goes. Time is gone forever. You know, even Joseph sees where we're heading. So, not even, but especially a guy like that. Costco can make 4%. I don't think they'll give it to the customers. All right, that's the future. See you, RJP. See you guys. Adios.